Hello everyone, welcome to the Trendline Investor channel. So today is a very special video and we're going to look at how to avoid losing money trading false breakouts, or how to avoid losing money when you have breakouts which do not really work. Now this is the most important thing that if you're a breakout trader, if this is the most important thing that you have to follow, and you have to know how you can manage your money, how can you manage your money that is at risk, and how can you avoid trading such false breakouts so that you know you are a very profitable trader and you can be consistently profitable over a period of time. Now this video, let me make it very clear, this video does not cover why false how can you avoid completely false breakout trading, right? I'm not going to tell you that, okay, with this video you can completely avoid false breakouts. No, you can avoid it to an extent, but definitely not 100%. So with that in mind, let's take a look at how I avoid false breakouts, or at least what has been my experience avoiding false breakouts, and how you can also control your money at risk. So that's the most important technique, how you can control your position size and how you can control your money at risk. Okay, so let's take a look at this video today. And if you haven't subscribed yet, don't forget the subscribe button, and don't forget to like this video as well. Okay, so first rule is you have to stop chasing stocks. Now, most of the stocks that are talked about on social media, or which are covered on news, are usually stocks which have already broken out, which are already moving. Now, for example, in this chart, if you see this range over here, if you're buying a stock anywhere around this range, around this extended green candles, which have really high moves, then you're completely doing it wrong. Now, in this case, the breakout happened here, but let's say you missed this entire area and you did not buy it here, but you're buying it here, then that's the first thing to avoid. So you should stop chasing a stock if the stock is already up, let's say for the last 4 to 5 days, or it's already up more than 10% or 20%, right? Now, it depends on whether you're a long-term investor or a short-term investor. I'm talking all these things that I'm going to tell you today is more from a position trading perspective or from a swing trading perspective. From an investment perspective, 10 to 20% doesn't matter. But if you're doing positional or swing trading, then definitely avoid stocks which are extended already, which are up already 20-30%, and which are already up for the last 3 to 5 days. The chances of you or chances of the trade turning into a failure trade is much higher if you start chasing stocks to extend. So that's the first rule. Keep that in mind. Now, the second rule is to enter the stocks right on breakouts, or at least at the end of the day. Now, the same chart here, if you see, I marked some zones over here. So the first thing is you have to identify the zone where we have a major resistance, right? For example, this is a zone, and also this is a zone. Now, this is a clear zone because I have 2 times the price has been rejected from this level, and also here, if you see, the price has been rejected 3 times. So remember, the more the number of times the price has been rejected from a particular zone, that becomes a very strong zone. And when a price breaks out that zone, you want to keep an alert, probably a 1%, 2% above that zone, and try to buy the first breakout here or either here, right? Now, that's the very, very first important rule, to set an alert either on Zerodha or on TradingView, and ensure that you are alerted the moment the stock crosses that zone. And then what you're going to do is you're going to buy at that zone or at that zone, right? Now, this is the first. So when you see such breakouts, you can already start buying the stock over here instead of buying it here. So that's more of an aggressive trader. But if you're conservative, you can also buy here, right? But the thing that you have to avoid is buying the stock around this zone below those areas, right? So if you're a breakout trader, that is not the zone to buy. But if you're a reversal trader or if you're a pullback trader, then probably you should buy it here, but don't buy it somewhere over here, because let the breakout happen, let it pull back like this, let it pull back a little bit, and then you have to buy the stock, right? Also try to keep, if you're really conservative and if you want to really wait for the stock to close at the end of the day or just before 3:15, just before market closes, try to buy the stock when you see, such breakouts happening, right? So that's the second rule. Buy only if the stock crosses the breakout zone. So that's the second rule. Now, the third rule is on the breakout, you should see some really, really strong green candles, right? Now, when I say a strong green candle, now this is a strong green candle. This is a strong green candle, right? Also, this is a strong green candle. Now, along with the green candle, you want to see a major rise in volumes. Now, if you see in these volumes here, the areas where I've highlighted, the volume is pretty high compared to the previous zone over here, right? So if a stock is breaking out with a strong bodied green candle, and if it has huge volumes, probably let's say around 3:15, you're checking the stock and you have some rules set up already, you got the alert, and now at 3:15 you're seeing the stock has a huge candle and the stock also has huge volumes, then at the end of the day you can probably take a position, or you can already take a position when the price crosses that zone, and then at the end of the day you can add more to your stock. Right now, that's the third technique that I want to talk about today. The next is never ever buy a stock if a stock is in a downtrend on the weekly charts. For example, here we had a breakdown here in this stock and the stock started going down. Right now, never try to buy a breakout around this zone or this zone here. Never try to buy those breakouts. Now, wait for a clear signal or a breakout on the weekly charts and then try to buy the stock there. Now, a clear rule that at least I use is trying to buy breakout stock. I always use CCI crossing 100 on weekly charts. Only then try to buy a stock for swing trading or position trading. Now, the reason why I say that is if a stock is a downtrend in the long-term charts, weekly and monthly charts, the chances of it reversing after a breakout on daily charts is much higher, right? So it's as simple as in the sea, when you have a huge wave, and if you have small waves, obviously the huge wave is going to take over the small wave and you're going to get lost. So it's better to avoid stocks which are in downtrend in the longer time frames like weekly or monthly charts, right? So that's the next rule that I want to discuss. Now, this is a very, very, very important rule. You might not have heard this in any of the videos before, but probably you have read some of the books, but I've never seen any of them covering this important rule. So never buy a stock after the third base. Right now, what's a base? A base is nothing but a stock after a breakout. It does consolidate for a few days before it again breaks out from that zone and again heads higher. Now, this was the first base. Then we had a breakout. We went up. Then again we formed a second base over there. We again had a breakout. We again had a third base. We had a breakout. Then a fourth base. We had a breakout. A fifth base. So on and so forth. Right now, never ever buy a stock after the third base, because the stock is already extended. For example, the stock has gone up from 460 levels to almost already 900 levels over here. Now, if you're going to buy a stock which is already up 70-80%, then the chances of you going to make money is less, right? So do not buy a stock after the third base. Now, even on the third base, I would suggest probably with lesser risk. But if you're getting a stock on the first base or the second base, that's the best entry point. Now, for me, out of all the bases, the best entry point is on the second base, because that's where you get full confirmation that the stock is going up, right? But let's say you don't have such small bases, but after the third base, let's say you have a huge 6 month base. Now, let's say the fourth base, the stock went into long consolidation and it consolidated for between 3 and 6 months. Now, at that point, you could probably buy that breakout even if it happens after the third base, right? Now, if it's very, very tight and if it has consolidated just for a few days, do not buy that breakout. Okay, so that's a simple rule that I wanted to cover. Now, I will also make a video separately on bases and how to count bases. But if you don't want me to cover that, do let me know in the comments so that I know that I won't have to cover it. Okay, and the last rule, which is the most important rule for you to avoid losing money if there's a false breakout, is to control your position size. Now, let's say first you had a breakout here. Now, the first time you are not quite sure whether this breakout will be a genuine breakout or not a genuine breakout, right? So what you want to do is you want to buy a small position with just 0.5% of your capital at risk, or depending on how you want to do, right? Some people might go with a 0.25% risk. Some people might want to go with even a 1% risk. But for me, the first position size, if you don't want to lose much, go with a small position size, keeping the risk really tight, 0.5% risk at max, and then buy it, right? And then once you have the second breakout here, which is the after the first base, where you breakout now, then you go on full with the complete risk that you wanted to take, probably with 1% or 2% risk. And that's the point when you see huge volumes and when you see a huge candle like that, green candle there, and when you know that it's just the initial breakout that's happening, it's after the first base, you have full confidence, you go full on and you buy that breakout with full confidence. Especially if the market is in a bull market, then it's high chances that the stock is going to head higher, right? So these are the rules that I wanted to cover today. And if you did find this video useful, don't forget to share it with your family and friends, and also don't forget to subscribe to my channel, because I'm going to make more such videos. I've already made many videos in the Learn with Trendline Investor playlist. Don't forget to check them out, and don't forget to let me know your comments in this video as well. So also, if you want me to make the base count video, let me know in the comments. Otherwise, I'll leave you here. Take care, stay safe and trade safe until I see you in another video. Bye bye.